Newfound gold. So our next session is mineral development project updates. My name is Lauren Boone. I'm a geotechnical engineer with Stantec, and most of the audience here is familiar with Stantec. We're environmental services, geotechnical engineering, broad-based engineering services, life of mine services. And today we're sponsoring the lunch break, so I hope it's good. And so without further ado, I'm going to introduce our first speaker this session. So Mr. Robert Booth, Vice President with Atlas Salt. Okay, green is forward, back, and that's the laser pointer.
Gotcha, okay. All right, how's everyone doing today? We all awake? Not too much Jameson last night, that's good. So just an acknowledgement of those that have come before us. This is what we're about to acknowledge our relationships with the people of Newfoundland and their claims. This is the Philadelphia lawyer stuff. We'll start over here. You start reading the first sentence, then we'll move to you. You will move around the room. Okay, so this is what it's all about. It's salt. 95 to 97% pure. No cyanide, no chlorine gas, no flotation circuits. This is as clean as what you can get. Our families, our friends that will be mining this in the future won't be dealing with diesel emissions. It's a completely green project. As a matter of fact, Stantec helped us with a study a while back that says that our mine will run on the energy required for 4 Newfoundland families. So I think to a lot of my friends that I've met, and they come from families of 8 and 12, but this is 4 people per family we're talking here today. I wanted to include this. Our mine is a 35-year mine life based on our reserves, but we were in Germany this past spring, and this mine's been around since 1885. And you look at what is reserve versus what is resource and what the future holds, this could be a 100-year mine, no doubt. And you look around even with the salt mines, Pugwash, Magdalen Islands, all over 50 years old, right? So this is the newer infrastructure that we'll be building here with newer technology. A lot of talk on the panel was about the automation work. That's a very succinct piece of what we're after in terms of the mining. So let's just talk a little bit about the scope. Some of you may have heard where it is. This is the Turf Point Port, and its location is in St. George's, Newfoundland. Right now, our feasibility study reports to a 2.5 million tons a year production, and it's all road salt. Our key infrastructure is a conveyor that's going to come up a decline, a 1.5 kilometer decline to surface, and then another 2 kilometers or so directly out to the port. So this is what I would call a Costco logistics setup where it's going to be done with very little rehandling. And obviously, it's not good to rehandle salt, bulk salt anyway. So let's look at what this does for the economy. There's no shortage of benefits to the economy when we get this going. Quite frankly, that's more than some Canadian Tire money here we're talking. And that goes right through from taxes to municipalities and how it's going to fit into people's lives. The other piece we have is we'll be hiring about 175 full-time people. And you can see how close, okay, I'm going to try this laser without screwing anything up. There we go, okay. So there's the footprint of the mine.
Oh, at the screen, sir.
Oh, There we go. That was just a test. Thank you. One of these are away. Good on you. So here's the footprint. It's about 35 hectares. Here's the town of St. George's. Our head office, we've bought and converted a bed and breakfast called the Palace Inn, very close to our mine site. So we've converted the downstairs to office space and a living space on the top floor. So you can see how integrated we are relative to the community. So this here is what the footprint would look like. This is all, pressing the wrong one. So I go back and I press the laser again. So here's the box cuts going into the mine. You can see the conveyor coming out all the way over a 2-kilometer run back to the port. And there's going to be storage facilities set up to protect the salt at the port. We're looking at 40,000-ton ships coming in to take the salt away to our distribution networks. So mine design, room and pillar mining has been around, probably one of the oldest mining methods in the world. Very simple mining method, and it's all going to be continuous miner type work, and I'll get into that shortly. So we're about 200, the top of the mine is 240 meters below surface, and it goes down approximately 300 meters. So I'm going to talk a little bit about geotechnical program. People in the area might realize we're out there drilling over 3,000 meters of drilling, and what this is the profile of, oh, here we go again, Bob. The profile of the decline going down into the ore body. So we did some geotechnical drilling. That wasn't part of the original feasibility study. That was a gap. That gap needed to be filled in before we progressed. And Terrain, Logan has done the drilling for us. It completed about 6 weeks ago. Terrain is doing the engineering for us with Gemtech, looking at the hydrology components. And the current findings are the original feasibility study talked about drill blast development of these twin declines. Well, it's not going to be that. The ground requires road header type technology. Now, last year, I came aboard last year realizing you couldn't start this without having one road header handy, and it's evident after we've done the geotechnical drilling that we were right in understanding what the risks associated with going with a conventional drill blast in these red beds. So with that being said, we've secured a second road header for the other decline, and that'll change our development methodology to get down into the salt. And for those miners out there, you know, the biggest risk to this project is getting down into the salt. So when we have these two declines done and we hit the salt contact, which we hit early with our geotechnical drilling, so our ramp is shorter. So there's a lot of things to update into our feasibility study, and that's currently what we're doing. We have SLR doing our upgrading our feasibility study based on the newest information we have, and that work is ongoing right now. And there's an example of the road header that we'll be using. Actually, this is the same one we saw in Germany. Talk a little bit about how we're going to approach this in terms of a team. It's going to be an integrated project team approach. And right now we have Samvik on, who is investing with us in $40 to $60 million in equipment. We have agreements in place based on the other funding that we need to raise. We have ICI doing our environmental permitting work. Hatch, we're just announcing right now that Hatch has come on as our lead engineer, and that's all pending funding once we get into the detailed engineering. And we're lining up all of these other relationships up front ahead of the detailed engineering. This is going to do a couple of things for us. Number one, getting into the procurement later on in the project, it tends to slow you down, and there's potential for rework if you have the engineer doing some work ahead of some of the changes that might be taking place. So the engineering is going to be incorporated with our construction partners in an effort to reduce the rework and get this project to the street faster. So the Sandvik partnership I talked about. So with that, Sandvik's going to come on board to the communities. They've already made it clear that they'll have a presence in Stephenville and in St. George's when this takes off. We're utilizing their AutoMine technologies in terms of automation, hearing that on the panel earlier today. Sandvik owns Deswick, and Deswick has already started to do work for us. And the outputs from a bunch of old miners sitting down with some very computer-friendly young people running Deswick software, we've been able to add 2 million tons of reserve just by the mining method and how we've laid out the room and pillar mining. So there's a lot of good synergies that have happened already and will continue to grow as this project grows. Same thing with ICI. They've been by our side from day one, helping us through the permitting process, connecting us with the right people. They're out of St. John's, and they've done Dave Robbins and his group have done some excellent work for us, and we're very appreciative. Again, as I talked to, Hatch will be coming on board very shortly, and we're going to work out all the details ahead of time so that this doesn't slow down the project. And what happens with the project is we end up getting our funding, and then everyone comes back and says, okay, Bob, we now have our funding. Yeah, it took a little longer than we wanted to. Now you need to cut that time off your project and still deliver on what that date is. And that's Project Management 101. And we're looking with the small team we do have on any synergies to reduce the critical path as things advance. We already have offtake agreements with Scott Wood for our salt, and we are looking to expand on that relationship, as well as looking at other relationships in parallel with the completion of this updated feasibility study. So let's talk about how I see the construction starting. So the road to construction basically is, continue the work on our environmental permitting. We have the big permits already wrapped up, but the smaller ones, i.e. to advance the early works surface development, to advance the main development underground, all those are underway, and we've got a great relationship going with the government, so thank you very much. And we're working together to have those checks and balances in place prior to any critical path needs. We're already doing the preliminary engineering, as I've talked to. Anything that's required to support the permitting, we're doing up front with the Canadian Tire money we do have. And we're looking to advance and optimize the mining plan, especially the declines once we get terrain's outputs in the next couple of months. We also have the updated feasibility study. I skipped financing, which is very important. Financing has started and it's been going on, and we anticipate this to happen anytime during that band, which would trigger when we would be starting the detailed engineering. We are currently doing the updated feasibility study, as I discussed, and that will tie into an updates in terms of what the financing will look like for our project as we move forward. And then we start getting the buckets going and get our earthworks started up. So, we're slating it in spring of next year. So really, when you look at it, our aim is still to have this project done by 2030. And all the preparations we're doing now to meet that timeline. Construction permitting, I discussed, we're advancing it in partnership with the government and David Robbins' group, and our IPD partnerships. So we talked about we've awarded to Hatch. The next one is going to be our conveyor logistics. We're going to one supplier to deal with all the conveyors logistics, and they'll be a partner up front before we do the detailed engineering. The next one after that is going to be your construction earthworks, and so on and so on. And as we advance into this relationship, we'll have a full team ready to go when we're ready to press the go button. And we talked about project financing and the preliminary work we're doing right now. And I just wanted to put up, there's no Hall of Fame, but we wanted to establish when we were in Germany. There's my buddy, he's the guy that came up with the 2 million tons, and I'm just taking credit for it, as you can see in the picture. And this is a very small team, but we're bringing in a very experienced team on the mining side to make magic happen here and do it all inside the sandbox of zero harm. Because at the end of the day, no pound of anything is worth a pound of flesh. I think that's it for me. Thank you very much. Have a great conference.
Take that. All right. Thank you very much. Thanks. Enjoy your pizza.
All right.
So our next speaker is Mr. Nick Capps, Director of Exploration with Calibre Mining.
How come I only get 14 minutes? Trying to cut me short. And I think we're probably on the wrong slide deck there. Looks like FireFly. All right. There we go. That's better. All right. Morning, folks. It's still morning for most. Anyway, as mentioned, I'm Nick Capps, Director of Exploration. So I'm just going to take you through a bit of a project update, sort of where we stand with construction right now, as well as I'd be remiss if I didn't give a little bit of an exploration update as well. So we'll jump right into it. As usual, I will very likely be making some forward-looking statements, so make sure you read that in detail, and if you really want to get into it, it's certainly on the website if you need anything else. So just an update on the company right now. Calibre does currently have 3 operating assets. We have our Nevada operation, the Pan Mine. We've got several pits operating in Nicaragua with 2 mills operating down there. Currently, we're pulling about 250 to 280,000 ounces of gold is our projection for 2025. That's not including anything coming out of Valentine. And then the Valentine project itself, of course, which is currently under construction. We are actively mining out there, and the mill and process plant are nearing completion. So really the focus for us as a company right now is that Valentine project. It is what we're calling our flagship. So it is going to be a fairly significant operation once it's all up and running. So they picked that up. The merger with Calibre concluded just about a year ago. And so Calibre took this over from Marathon Gold and really have been optimizing and moving forward with the construction fairly rapidly there. So the current target is for gold production in Q3 of this year. So that's coming up fairly quickly, and really looking forward to seeing that first gold bar coming out of the ground. Projected life of mine about 14 years, with a lot of potential for expansion there. And as some of you may have heard, we've just recently announced a merger with Equinox Gold. So that's a very exciting one for us. I think the Marathon to Calibre merger grew us into a fairly significant mid-tier producer. This merger really moves us into the senior producer category. So we'll be producing up to 1.2 million ounces a year from 9 active mines right now, which really sets us apart from a lot of other operations in the country. If you look at the 2 flagships of what will be the new Equinox company, we'll have Valentine here, which will be producing about just under 200,000 ounces a year, as well as the Greenstone mine in Ontario, which is going to be producing about 390,000 ounces. So all in, just shy of 600,000 ounces of Canadian gold produced every year. So really exciting for us. We'll actually be the 2nd largest gold producer in Canada after, of course, Agnico. So pretty exciting coming there. That process has been approved by the voters, and we are expecting that to fully close by the end of the 2nd quarter this year. So coming up pretty quick, and yeah, it's going to be pretty exciting. It'll move us to about a $7.5 billion market cap company once that combination is fully realized. So I won't spend too much time on that. I'll really start focusing on Valentine. I think that's what everyone's excited for here on the island. And it is a very exciting project. We are going to be producing about 195,000 ounces of gold and 14-year mine life, average grade of about 1.6 grams. And so right now we're sitting at about 2.7 million ounces in reserves. That's included in the 4 million measured and indicated, and then we have an additional 1 million in inferred. So total resource on the property is just over 5 million ounces of gold. And that's not including any of the expansion potential we have. I think there's really some impressive potential to expand that, both in terms of the life of mine and the overall resource. So we have made some fairly significant steps forward with our local agreements, permitting, and just some of the relationships we've developed in the communities. We've got everything is fully permitted right now, including the Berry pit, which is our third pit that we brought into the mine plan. So pre-stripping is starting there. We're actively mining in both the Leprechaun and Marathon pits. We have a benefits agreement in place with the province, which sets sort of goals for hiring, both local hiring and some of the DEI hiring targets. And currently our provincial hiring target is 85%. We're currently sitting at 97% provincial hires or provincial employees. We have agreements in place with 6 local communities. So those are the 6 communities that we've designated as closest to our project that may see the biggest impact. And we have agreements and good relationships with all those communities. We also have socioeconomic agreements in place with the 2 First Nations groups that may see some impact from the project. So that's the Halibu and the Miabekek. And those have been going quite well. So getting into the construction itself, it is about 93% complete right now. As I mentioned, we're targeting Q3 for first production. We are stockpiling some ore. We are actively mining from 2 of the pits, Leprechaun and Marathon, and it's really impressive to see where the project is right now. Commissioning is at about 34% right now. So there's a few things like the crusher has been fully commissioned and actually had the first run on that. I think it was about a week ago, last weekend. We actually ran the first. It was a bit of waste material, but we actually ran the crusher for the first time. So that was pretty exciting for everyone to see on the project. It's one of those steps that you can really see some results. The mill motors and liners are installed and pre-commissioning is currently underway. The ADR plant and gravity circuit are mechanically complete. They're being turned over for pre-commissioning currently. And some of the project capital remains, so we are still fully funded. There was a little bit of an increase there, but as mentioned, we've got the money in the bank to get it done, and we're still looking at Q3 for first gold on that project. There is also a phase 2 expansion that was initially recognized in the feasibility study. That's something we're currently looking at. We're doing some further detailed work on that to see if that's something that may be worth pulling earlier. So that would bring us from about 2.5 million tons a year up to 4 million tons a year. And I think that's something that, there is some potential for even further expansion, potentially up as high as 5 million tons a year once we get that all figured out. So a few updates on just some photos of the site. On the left here, you'll see the process plant footprint. So it is a pretty impressive structure right now. So you have the process plant itself here, the crusher is just in the background there, and then the conveyor comes out here, ore storage there, reagents, and the cyanide leach tanks here. And then on the other side there is our permanent camp. We've currently got over 500 people on site, actively working on construction and operations, and then we'll be in steady state just over 400 people on site at any one given time in operations, and that's not counting any of the potential phase 2 expansion construction that we'll be taking on. On the left there, you see the primary crusher. So that's what was commissioned just over a week ago. So that is fully operational now. And then that's the run-of-mine pad on the right. Again, fully constructed, fully ready to take ore once we start into full operations. And the conveyor, again, that was, we've got a video that actually shows that crusher in operation and then rock moving up that conveyor, which is pretty exciting for me. I mean, it's been a long long journey to get to this point, so being able to see rock actually moving through is fantastic. On the right there is the transfer pad, and that stores about 9,000 tons in that building, and so that's basically a day or two of operation stored there. And then just moving inside the process plant, you can see the mills on the left side there, and then the ADR. That's one of the main focus points right now, is really getting that gold recovery circuit fully finalized and commissioned. So that's where a lot of the activity is currently. So that's sort of where we stand right now. We are getting pretty close. I think it's getting pretty exciting for everyone, especially for some of us that have been on that project for a long time. To see that first gold bar, it's something that a lot of geologists don't get to realize, or a lot of people in general don't get to go through in their career. So certainly exciting one. But what's more exciting for me is really the potential on the project. So what we've done historically is really been concentrated just along this really small portion of the Valentine Lake shear zone. And I think really the focus has been about an 8-kilometer stretch of what we have, about a 32-kilometer shear zone on the property. And there's a lot of potential outside of that. I mean, we've spent 14 years really focused on resource development on that shear zone. And when you step outside of that, there's no reason to expect that there's not other deposits to be found on this property. I think if you look at a lot of the similar orogenic belts across the world, you have what we've identified the Valentine Lake shear zone is a primary structure, one of these first order structures. And generally, again, one of these forward-looking statements, so don't hold me to this, but a lot of times these structures, these first order structures, have splays, parallel structures, additional shear zones in the area that host just as much, if not more, mineralization. So really that's our focus for this year. We've got a fairly substantial drilling program that we're undertaking, about 75,000 meters, and that's currently ongoing. We've got a couple of rigs operating on the property now. And the goal really is to figure out some of the structures, figure out the geology, and figure out where there is potential for some of these additional deposits, with, of course, the end goal of, at minimum, replacing the 200,000 ounces a year that we'll be extracting. So fairly early days in that. I think access is a bit of a challenge. We're bringing in a helicopter rig for this summer. We're going to be running that for about 6 months this year, and basically until the weather cuts us off. But that's going to give us the access to some of those areas that have really had little or no historic exploration. So there's some areas that, very likely, well, some of the old timers have probably been out there, hitting a few rocks here and there, but basically no work historically, other than some of the geophysics and sort of broad scale surveys that we've done. So we'll be trying to put some holes in some new areas, and I think to that end, we through last year we did a fairly broad scale property wide geophysics survey. We did both magnetics and VLF, both of which indicate some really interesting structures that we're going to be following up on. We did a full property wide till program as well, and that's between those two programs. We're going to be using those as targeting moving forward. And yeah, I'm pretty excited to see what else we can drum up on this property. It's about 300 square kilometers, and realistically, we've explored maybe 10 or 15% of that. So just very briefly, this is our sort of game plan of our different prospects. So from the new areas on the left that have had little or no work, all the way to our reserves on the right, I think we do want to try and cover all aspects there with the goal of moving some of those new areas through the treadmill over to the right and start developing some new resources. So areas like Northwest Contact and Minotaur and South Quinn, there's little sniffs out there, a little bit of smoke, but haven't really found, just haven't done the work out there to see if there's some actual fire. And then as you move over, Frank is one of our most promising current targets. It's an area just southwest of Leprechaun, which I'll show shortly. And that's an area where we're starting to see all the same sorts of mineralization, just some really impressive results coming out of Frank. So this is just a cross section, or a long section, I should say, showing the whole property. And this just really highlights, again, this is focused on the Valentine Lake shear zone just because this is where we have the data density, but this highlights the potential, right? So you have we have 5 resources currently on the property. On the left, so this would be the northeast, is Victory, all the way down to Frank on the bottom right, or to the southwest. And everything in red you can see there is assays over 0.3 grams per ton. And basically, you look at some of these deeper ones under Marathon and starting to get down deep in Frank, and we're drilling down to 1,000 meters with continuous mineralization all the way down. And look at how many gaps are in there, both in between some of these deposits as well as at depth. And the potential is just enormous. And again, this is just along that, well, from Victory to Frank is about 12 kilometers. So along that stretch, really a lot of potential there for some deep drilling, which we'll be doing this year, and really trying to build out the resources that we currently know, see if there's some underground potential, as well as just try and fill in some of the gaps in between those current deposits. Just very quickly, I'll touch on Frank before I wrap up. So this is where we've been having a lot of excitement over the last say 6 or 8 months. Some fantastic results coming out of there. The same consistent, long, decent grade results that you're seeing in sort of main zone, Leprechaun, main zone, Marathon, and this is up to 200 meters almost of 2.5 gram material. Which when you look at that and you imagine what sort of resource you might be able to build with that kind of consistency and that kind of grade. It's pretty exciting. There's a lot more work to do in Frank. We're looking at tracing that out to surface, and so we'll have a rig operating in Frank basically for the balance of the year with the goal of eventually putting a resource together and seeing what that actually looks like, seeing if that's something that we can pull into the mine plan. And I think that's about it for me. Thank you very much.
Thank you, Nick. Our next speaker is Mr. Darren Cooke, CEO of FireFly Metals. There you go, sir.
All right, thank you very much, and it's been a pleasure to attend this conference for the first time. I must say I've been really impressed with how it's been organised and catching up with so many people in the mining community. It's good to see that it's very strong and vibrant, and there's a lot of great stuff going on in the area. All right, so what I'll do today is just give you a bit of an update on our project at Green Bay, the copper gold project, and just give you an idea of where we're heading, where we've been, and where we're going. Obviously, people are aware of the location. We're in Bay Vert, not too far from here, about 3 hours drive. And it was formerly the Rambler assets that we acquired out of administration. Now, I start off with this slide just to give people an idea of what an amazing year and a half it's been for us so far. I mean, it wasn't long ago that we got these assets. It was in administration. A lot of people in the community had lost their jobs, and it was pretty grim. But what we've done is we've come in with a game plan, we've come in with the capital backing, and we've really started to execute our vision on what this deposit could become. And we see this as a world-class copper gold system, and that term gets bandied around quite a bit, but as you'll see from some of these slides that we've got coming up, the scale of this deposit is absolutely mind-blowing when compared to other VMSs in the world. But you can see the scale of work that we've done. We've acquired it. We've got the mining going again. Gus and his team are putting in exploration development. Key thing there was to get us in position so we could drill the ore body out. We've gone from no rigs to 1 rig to 2 rig to 4 rigs. And we've got 6 rigs on site at the moment, and we're getting a 7th rig in a couple of weeks' time. So we'll have 6 underground, 1 on surface, and we've already done in that year and a half nearly 90,000 metres of drilling. I mean, it's a lot of work to go from nothing to 90,000 metres in a year and a half. So it's probably one of the bigger programs around. And look, you can see from some of those drill results, we wouldn't be investing that heavily in the drilling if we really didn't, believe in the project, and we weren't seeing fantastic results. Some of those hits are, you don't see like those sort of widths and those sort of grades in copper and gold very often in deposits. It's been a little bit challenging lately, as everyone's aware. This was our share price graph to April. And then Mr. Trump decided to have his Liberation Day and copper got smashed. What I would say though, and I've made this point very frequently, is that we're already bouncing back. It was a great buying opportunity a few months ago. And the fundamentals for copper have not changed. We still need more copper in the world. We still need more copper in tier 1 jurisdictions. Whether they make a TV in Detroit or they make it in China, it still needs copper. The aging infrastructure in the US, they're going to need more copper. And even if Mr. Trump decides to try and get as much copper as he can locally in the US, they can still only provide 45% of what they need. So they are still going to rely on the rest of us. There's a lot of nervousness about what that means for the economy, which is why the copper price goes down when he puts tariffs on. But I think we're starting to see that Mr. Trump and the American people are figuring out that, the rest of the world wasn't ripping the United States off. We're actually subsidising the great American dream. All their cheap manufacturing from overseas enabled them to buy the TVs, the trucks and everything quite cheaply. So I think we'll start to see that settle down, and we're very bullish about the long-term future of copper. Just in terms of our company, and I won't bore people with this too much, but we're currently market capitalisation of about $500 million. We are ASX and TSX listed, so we're not just an Australian company, we're Canadian as well. And over 90% of our employees are actually based here in Canada, so very few people actually in Australia. And the great thing is that, this little old project in Newfoundland, we've got some really big investment funds on board, BlackRock being our major shareholder, and they are a large global fund. So that tells you a lot about the confidence in investing in Newfoundland. This is the location in the Baie Verte Peninsula, but I'm sure most people in this room are very familiar with it. It is a great location with great infrastructure. And what's been really encouraging to speak to, the theme you'll get from this conference is there's a lot of collaboration in that Baie Verte district. We see Maritime doing great things with their projects. We see Shoreline doing some brilliant stuff with their aggregate business, and we're all collaborating to, really strengthen that Baie Verte area, because there is a huge future there, and I would pretty much call it a generational opportunity to leave a legacy behind. With the mine life that we're sort of looking at now, if we get this thing up and going, like we're talking 15 to 20 years plus mine life, which, Baie Verte has not had that certainty for a long, long time. So, there is that opportunity to leave a great legacy behind. So just to remind people what we've got here, it is a world-class deposit. We've got a large-scale resource that totals about 60 million tonnes at the moment at around the 2% copper equivalent mark, and that will underpin the future development. We bought this, the former Rambler assets, and we inherited a lot of infrastructure, and that gives us a big head start in terms of the time to get this back off the ground. So we've got the workshops, we've got water treatment plants, we've got access to underground, we've got all sorts of things to really give us that kickstart. As I mentioned, the underground access, we don't have to worry about putting a decline in, because we can already drive a truck down 900 metres below surface. So, that would take years to put in if we were starting from scratch. Right, so it gives us a big head start, and we can do that drilling from underground, which is also very beneficial in terms of the cost of defining it, and it also means when it becomes time to mine again, we'll be able to get it off the ground a lot quicker. The ore itself, it's the processing is quite simple. It's a very clean ore, not really many deleterious elements, and Mr. Gowdy, who's in the room here, who now works with Maritime, he did a great job with the Nugget Pond mill, and that's really given us a really good understanding of how it behaves metallurgically. So it's very simple metallurgy, really good recoveries, really high recoveries, and a lot of gold as well in there. And then we have the export, the concentrate. We're working with our partners to get the port going near Baie Verte, and that will have great benefits for the entire community. But this concentrate is in demand. We are getting offtake partners hammering us to try and work out offtake agreements. And that will be a mechanism that we'll use to help fund the development of this project, because there's that much of a shortage of clean copper concentrate that people are getting desperate and to secure supply for their countries, for their smelters. And you'd be amazed at the terms and conditions that we've got out there at the moment that will really help build this project. One of the things I'll just touch on, and I don't talk about this much anymore because a lot of people have moved on, but just to understand what we're doing different than Rambler, all right? Because, what we've, my favourite saying, definition of insanity is doing the same thing and expecting a different result. And that's why we're not producing at the moment. We're stopping it, investing, and making it a lot bigger. But the problem they had was there was a debt spiral. They didn't raise equity back, and it is making it right. So our plan is well underway. We're executing it, and people are starting to see the difference that that's making. The key reason, technically, in my view, that it failed was there was a massive disconnect between the ore body scale and the infrastructure. And to put that into perspective, we've got the resource up to 60 million tonnes. It was 40 million tonnes when we bought it. Poor old little Mugget Pond Mill was 500,000 tonnes per annum. So, with our current resource, it'd take 120 years to process it. And, mining is a simple game of unit costs. The smaller the scale, the higher the unit costs. And the way to make this really shine is to get a new mill with a lot higher capacity. And that's what we're doing. We've put in our EA application to get a new project off the ground that's much larger than Nugget Pond. And that is the way to make this economic. We've also looked at other things like reducing the haulage distance. Having the mill on site reduces the haulage to Nugget Pond, and having driven that road in winter, I would hate to be driving trucks out there. It's going to be far beneficial to have it on site. And then there was a lack of drilling. They were mining blind half the time, so a lot of surprises. The fundamental thing for any geologist in mining and grade control is you've got to know where the ore is before you charge in and mine it, and that just was not happening. Lots of surprises. They couldn't even keep Dwight's mill fed. So, we're doing a lot of drilling, as evidenced by the number of rigs we've got on site, and we're going to set this up for long-term success. Now, just in terms of the ore body, you can see I said world-class scale. The strike that we know about of this system so far is well over 2.3 kilometres, right? We've got a high-grade upper VMS zone, and beneath that we've got a broad stringer zone, which is amenable to bulk mining. Because most of the historical mining was on the VMS, the high grade, the ore body actually starts 200 metres below surface. And you can see on that diagram where we put our exploration development in. So from that blue dashed line, there was only one drill hole ever drilled when we acquired it. And all of that extensional drilling has been work we've done. And we've proven that the ore body continues, and it continues a long way. And you can see those results there, some of the best results in the history of this project. The highlight being 86.3 metres at 3.7% copper equivalent. That's true thickness, right? So that is a big, big intersection, and it's getting better as we're getting further down plunge. On top of that, Crispin mentioned this in his presentation yesterday, but we do downhole electromagnetics, and we've got a conductive anomaly for another 700 metres in front of our drilling. So the ore body is still continuing. We don't know where it's going to stop. Say it goes out that far, it'll be over 3 kilometres in strike, and in terms of VMSs, 3 kilometres of strike sort of getting up there with Kidd Creek. Different style of VMS, different ore, but the size and scale, this is starting to become Kidd Creek-like, which is pretty awesome when you think about it. As Crispin presented yesterday, we built an exploration team because, we truly believe that this is a camp and not just a single Ming deposit. VMSs always occur in clusters, and there's been some great work historically done around, some of the old champion geologists like, Peter Dimmel and Vic French and those guys and the prospectors. They've done some great work, and there's lots of indications of more mineralisation. The Ming mine was just one of 8 historically producing mines that we have on our claims, and you can see here how close it is. There's indications that this is a camp. It's a cluster of deposits, and we are going to find more copper and gold deposits in the district. Unfortunately, we weren't able to put this in Crispin's presentation yesterday. His team's done a fantastic job on the surface exploration. It only got released last night, so I've snuck it in now. But within 3 or 2 kilometres of Ming, there's 2 other historical mines, Rambler Main Mine and East Mine. People who are familiar with the district would know it well. We've drilled our first 2 surface holes into Main Mine, and you can see those results, 12.9 metres at over 4 grams gold, 0.5% copper, 1.5% zinc, 10 metres at nearly 6 grams gold, 1.3% copper and 1.7% zinc. And it's open, right? We're drilling out there now. But just imagine if we've got a mine over at Ming, and we're adding resources down plunge. Now we're adding resources very close to the surface. They finished mining there in 1967, and they only mined to 200 metres below surface. It's on the same contact as Ming, similar style of mineralisation, and you can see where we're going. So really exciting that we've got another ore body out there by the looks of it, and Crispin and his group will continue to keep drilling that out. This slide here sort of puts the scale into perspective. You can see how well Ming's been defined in the sort of scale of Ming, and you can see how little drilling's been done on the other deposits. So God knows what we're going to find out there, but I'm pretty positive we're going to get another mining front happening pretty soon. So look, just our strategy moving forward, what we're doing, we're going to be growing this resource, continuing down plunge at Ming, and if the drill results continue from Crispin's work, we'll probably look at adding some surface resources as well. Upgrading it, so increasing the confidence in the resource for our future mining studies, doing a lot of infill drilling to increase the M&I. So of the 60 million tonnes at the moment, or the previous release, about 24 million tonnes were in the M&I category. We will significantly flip that ratio around, make new discoveries. I've touched on that briefly, demonstrate the scale of this thing, because I think people are going to be super surprised by the MPVs of this project and how big this mine will be. And then leverage off the jurisdiction, leverage off Bayver, leverage off the great work and how brilliant it is to work in Newfoundland. Well, this is in our release, so you guys can have a look at this, but the key milestone for us will be putting out these mining studies to prove the economics of restarting the operation, and that's going to happen later in 2025 into 2026. So we will have feasibilities out, and we're really hopeful that we'll get released from our EA soon, so we can get her going, get the construction started, and really bring this thing into production a lot quicker than people would expect. So that's it. Any questions, please pop by the booth, and thank you very much.
Okay, so our last speaker for this session before lunch is Mr. Garett Macdonald, President and CEO of Maritime Resources.
All right, thanks a lot. Okay, we'll keep this quick because it's lunchtime and we'll get through this fast. So, key points for investors: Maritime Resources is actually the only gold producer in Newfoundland and Labrador at this time. Happy to say that. On a small scale, mind you, but it's the first step to ramping up our main Hammerdown gold project near Kings Point. This is going really well, so I wanted to just highlight a few points for people who might haven't seen the progress that we've been making, and it's been pretty quick over the last few months. We just raised $20 million. We brought in Eric Sprott as one of our lead investors on that deal. That was a really important thing for us, to be honest. We weren't actually looking to raise that much, but it just happened that there was a lot of demand for near-term cash flow stories like ours, regardless of scale. So we took advantage of that. This actually gives us almost all the money we need to build the Hammerdown project, okay? So that's going to be happening this year. Gold prices, as you know, have gone crazy, which we'll take full advantage of being a new producer. The Pine Cove mill that we acquired 2 years ago is actually operating right now. It's running extremely well. We first produced gold here about a month ago, and it's now steady progress throughout the next few months as we ramp up into the Hammerdown project. Hammerdown is a high-grade open pit, as you guys know, about 4.5 grams per ton, which is extremely high for an open pit deposit anywhere. regardless of, I guess, scale, and this is maybe how we're different than some of the other presenters, we're starting small. We're starting with very low capital. We think about $15 to $20 million is all we need to get the Hammerdown mine started. Cash flow is king. In this market, capital markets, it's, regardless of the gold price, have been difficult for all junior companies to raise money. And our mission, I guess, or our business plan has been to get the Hammerdown project cash flowing and then work our way up into something bigger and better. And as I mentioned, we're not a big company, and that's fine. That's okay. We're looking at sub 100,000 ounces per year as a production target to start. In the last few years, scale was the most important thing, I think, for a lot of investors. They were looking for the 200, 300,000 ounce producers, which are great, of course. There's a small group of sub 100,000 ounce developers and producers that were certainly in that camp. As you can see, these are just some of the comparable projects that we often talk about, and their market caps are multiples of ours. So there's still lots of upside, we believe, in the Maritime story. I don't have to tell anybody here how active and how good it is to be working here in Newfoundland and Labrador. I personally have been working here for about almost 6 years now, and loved every minute of it. This is a great place to do business. Lots of great projects that you've heard and seen throughout the conference. It's a bright future here and I focus on gold and copper, of course, in our business, but as I heard with salt and other industrial critical metals, lots of opportunity. Closer to home for us, home is the Bayvert Gold and Copper District. Our projects here at Hammerdown are down to the south. As you guys know, this was a historic mine. It ran about 20 years ago. We're now looking at starting this mine again at a gold price that's roughly 10 times higher than it was when the mine shut down. So the mine shut down around $325 per ounce, and they had a cutoff grade of over 8 grams per ton. We're dealing with what they left behind. There's a lot of exploration upside as well. As I mentioned, though, the business plan is simple. Develop a small, high-grade open pit, going to an existing mill that's now operating, keep the capital down, generate some cash, move on and grow from there. That's what we're doing. Bayvert is blessed with a lot of assets and infrastructure, skilled workforce, great place to work. We work closely with Shoreline. We work closely with FireFly, one of our investors. It's been a great relationship all around to try to unlock value in this district. And I think we're just getting started. Plans for 2025, very simple. We restarted the Pine Cove mill. It was on care and maintenance for about 2 years. Okay, so we hired a team back to work. We identified some stockpiles that were existing around the old mill site. Of course, the price of gold made them a lot more interesting. So we've been processing those through the mill. We produced our first gold bars about a month ago, and it's going to be steady from here on. So those are the first 2 bars right there, which is really good for a junior company to finally hold those in your hands. It was a big milestone for us. On the plate for the second half of the year is Hammerdown. Okay, so we're going to be starting construction here very shortly. Some civil work to start with. We'll get into the mining kind of summer, fall, and first ore will be delivered up to the plant later this summer, early fall. So just one more kind of view on Hammerdown, what it is. It's a high-grade series of quartz veins, almost 110 vertical high-grade quartz veins kind of packed together. Sometimes we can mine them individually. Other times we have to mine them all together. You can see here we were doing some test excavations there at the mine site. For us, the biggest challenge on the project, since this is a technical session, we'll talk a little bit about that, is actually mining these narrow veins. They can sometimes be as wide as, maybe this podium here or less, but they could be multiple ounces per ton. So you really got to be careful about mining these veins because you don't want to miss them, you don't want to lose them, you don't want to dilute them too badly and lower the grade. So you got to be careful with that. That's the key to this whole project. We did a feasibility study a couple years ago. Since that time, a few things have happened. We bought another mill, so we bought the Pine Cove mill. We've got that running again. Gold prices have gone up. We've done a lot of extra drilling at Hammerdown. Here's some examples. Grade control is one of the most important things I think you can do before you start a mine. As Darren mentioned, the more information you have through this ore body, the better. So we drilled, even after a feasibility study, we went and drilled another 273 holes over 8,400 meters in the first 40 meters of the open pit. So we hammered this thing hard with a lot of information on a 10 by 10 close space pattern, and the results were fantastic. You can see some of the grades, and my eyesight's getting so bad. Well, we were hitting like 12 grams over 28 meters, 19 grams over 17 meters. This is at surface, like you're walking on this stuff. So this is the first area that we're going to go to. It's going to pay back the capital very quickly. Don't forget, this is going to go to a mill that's already running. So the capital for us, we think it's 15 to 20 million to get the mine started, starting with some contractors, starting with just a small pit to get off the ground, get the cash flow, work our way up, again and again, trying to expand it. Hammerdown is very simple site plan, small open pit. We're only trucking 700 tons per day to the Pine Cove mill, so a fairly small mine, fairly high grade. We estimate annual production maybe around 30 to 50,000 ounces per year. So it's a good start. At these gold prices, maybe with all-in sustaining costs around $1,200 per ounce, it's a very healthy margin. One of the keys, of course, to our plan is the Pine Cove mill, which we acquired in 2023 from Signal Gold. It was on care and maintenance for 2 years. It's running again. We work closely with our friends there at Shoreline, and it's really a great site. It's not too often you can find an in-pit tailings facility like this. Lots of opportunities around the site for other projects, other innovative ideas. I'm looking at TSF1 there now, and that's an actual gold resource for us. We think there's quite a bit of gold in that tailings pond that we're going to look at. The mill's running. This is some of the, my favorite picture on the right there is some of the gold that we recovered from the cleanup in the mill, running through and checking every pipe, every motor. I think the guys have done a great job scrubbing that mill down to bare metal and then bringing it back, and now it's running quite reliably. So big success with that. And the other one that we really liked was the stockpile processing program. So this was actually, the guys running around, looking around the plant site. We did a series of test pits, several hundred test pits around the whole property just to see what was left behind. At $3,400 an ounce, at whatever that is, 4,800 Canadian, there's a lot of value left here. The big value, other than the gold, of course, was that it helped us commission the plant back to life. So after 2 years of care and maintenance, we now have it running. It's getting ready. All the systems, all the checks, all of the monitoring and reporting will be ready to receive ore from Hammerdown in a few months. That was the real value. But I do like the gold. Geological setting, I'm not dwell on this too much, but this is an area, of course, there's a lot of big projects along this trend. I was actually working over in Northern Ireland at that one, and that's how I found out about the Hammerdown project. They look identical. You can't tell them apart. Only difference is that one can get permitted and one can't. 4 minutes until lunch. Green Bay, Whisker Valley, we've got a lot of ground that we've consolidated over the last few years. In fact, I think it's up to maybe over 100,000 acres. It's a big project. Our company is, like I said, focused exclusively on cash flow. What can we do to get Hammerdown started? So that's why we've bought processing assets. That's why we've pushed Hammerdown through feasibility, getting it ready to start up this year. But that doesn't mean there's, no desire to do exploration. Of course we want to. We just have to, recognize the capital constraints that we have and work our way into something that's bigger. There's a lot of potential in this area, and as an engineer explaining geology to people, I can just tell you that I've seen structures that you see in other camps, and where these fluids have come up from faults connecting together. We see that repeated in several areas on our property, including VMS intrusions, stuff that looks like Rambler down to the southwest corner especially. So a lot of potential around here for extra gold, more copper. We're going to look at that, of course, out of cash flow as we get developed. We want to do a strong push onto exploration. Funny enough, even around the Hammerdown mine site, Hammerdown is up the top of the page. Since the 5 or 6 years that I've been here, we've still got targets within 100 meters of the main deposit that we haven't drilled yet. Why? Because we've been limited by capital. Finally, that's starting to change with the cash flow coming from the mine. We're going to hit this very hard. So I can see at least another 3 or 4 deposits on the doorstep of Hammerdown. There's even potential at Hammerdown itself to go deeper or along strike. So as it is now, going 700 tons a day to the Pine Cove mill, Hammerdown's got a mine life of at least 8 years. And that's not including the targets that are right on the doorstep that are quite advanced, including Orion to the southwest. I can see us having certainly 10 years of mine life or more just at Hammerdown itself. When we acquired the Point Roost project, yes, it was for the mill, tailings, the whole site that we were interested in, but the exploration potential as we started to look is actually pretty exciting. There are several we'll call them near mill targets, open pit, generally 2 to 3 grams. We have several of those that look very attractive. I do want to push this as well, so we're going to do some exploration here this year and start to build up a reserve base at the mill. Sometimes Hammerdown or other deposits down there may be slowed down or from the weather or whatever. We're going to have assets that we can go to here to keep the mill running. So there's a lot of potential up here as well. One of the ones we like is Deer Cove, and this is up at the north corner of the property. Historically, Noranda was there in the late 80s. There's some interesting gold veins that look very attractive. The highlight, 6.9 grams over 25 meters, and it's just sitting there. It needs some work. It's not ready yet. So we like to get up there and do some more drilling, put a resource together, start looking at it as a satellite deposit that could feed the mill. And that's a big advantage for a company here with exploration targets. We don't have to cover the cost of a brand new mill. We have one that's running. So these deposits just have to cover the operating costs to develop them, to build them and then develop them. But we don't have to pick up all the extra costs of a mill and a tailings facility, which is extremely expensive. Nugget Pond over to the east is a gold circuit that we acquired a few years ago. Really good gold circuit. It actually processed ore from Hammerdown and Nugget Pond years ago. So we're looking for options and looking at options and ways that we can unlock value with this asset. It's a really good plant, and with a little bit of work, it could be running again quite quickly. Talking about innovation, ore sorting. I think this is the last slide. Here's an example of where I'd like to be able to use it. There's a waste dump at the Argyle mine. This was a mine shut down about 2 or 3 years ago by Signal. Gold prices have made this waste dump into a low-grade stockpile. Okay, so there might be a way, I'm saying might because we haven't done a lot of work on it yet, to recover the sulfides from the waste dump. You've got an option then to use the rejects for construction aggregates, and we have a neighbor that's active in that market. Removing that waste dump actually, of course, eliminates an environmental liability, but in this case here also opens up additional ground for potential open pit pushbacks. So win-win-win all around. This is something we're going to look at. There's all kinds of opportunities now. Sorting technologies come a long way. Gold prices have made it attractive. So just want to show you this. And finally, just a quick ownership structure. We've had a lot of interest here, a lot of activity just in the last few months. Dundee Corporation is our largest shareholder at 44%. Eric Sprott recently came in with his investment. FireFly has been a great shareholder, sitting there at 5%. We're pretty tightly held, as you can see. Mostly institutions and some corporate ownership, very limited retail float out there. So we've got about 20 million in the bank. Market cap is about 120 million at the moment. So things are starting to get interesting. Stay tuned for progress updates at Hammerdown as we get things going. Some more gold bars poured, and Peter and Perry and Dwight and Larry and the guys and Jason all have done a great job. And I think any questions, drop by the booth. Okay, lunchtime. Let's go. Hey, is that lunch?
Appreciate it.
Thanks. Okay.
Okay, thank you for all our speakers, and lunch is being served next door.